waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets call.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the red. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promises keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no chains. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Standing strong through it all. Seacrest Markets, leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Future is defined. Stars in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
keep grinding.
it's a lifestyle,
keep crushing. We own the vision.
Welcome to the London live session. going to share my screen for everybody. What a great day we had in the markets yesterday. So very, very quick recap on markets. Primary discussions were around getting long, pretty much. Just getting long indexes. You can see that my refresh rate is still hitting me here. So I'm going to try and figure that out in a moment because it's not cool that my camera keeps glitching. Let me try and turn it down a little bit to see. Yeah, that looks good. That's better, isn't it? Oh, is it? Oh, wait. Visual effects, camera. Standard. Let me try and turn it down to standard def because it was on full resolution, then I turned it down to HD. I can see it glitching a little bit. Anyone knows anything about cameras? Let me know. I have a Logitech Brio 4K camera, and every time I share my screen as well as my camera glitches, and that is tragic. If I de-share my screen, it stops happening. So I don't really understand the refresh rate. I mean, my drivers are up to date. So anyone that's got any recommendations, please let me know. No, it's nothing. It's not going to do anything, is it? Let me see if I can. No, I can't do that. I will spend some time this afternoon looking at my camera and figuring it out. I may just have to buy a new one, but it's brand new within 12 months, so this shouldn't be the camera problem. But I keep having these issues lately with the streaming, so I apologize. I may stop the cam. Let me know if you want me to stop the cam if it gets on your nerves. If not, don't worry. We can really focus on what's going on otherwise. So market-wise, the brief summary yesterday, and I'll quickly kind of recap, was we had a lot of geopolitical volatility over the weekend from the US intervention in Venezuela, as well as the removal of the Maduro administration. There was a lot of pressure around WTI crude, around the $58, $60 a barrel. We were looking at potential Goldilocks of global markets riding a wave of optimism. So we were looking at S&P rallying up towards 7,000, the target, which you'll see on the screen in front of you. We can see that US ran pretty much up to 6,900 and a quarter. We had key levels in gold that we were looking at. We were discussing how we're potentially looking to see if there's going to be a transition and a rotation out of safe haven assets into risk, and we did see that. We did see a transition from safe haven into risk, but gold actually obviously also still performed well, and we'll of course cover that. But yesterday was, like I said, a really good day. I didn't take any positions during the European session, but as we transitioned and crossed over on the rollover from Europe into the US, I did take a long in the S&P, or in the ES in particular, which was a lovely trade. Now, in terms of what happened yesterday with markets, obviously the dominant headline. So the dominant headline, let's slow down a bit. The dominant headline was the capture of Nicolas Maduro by US forces. We did see a flight to safety, but there was still that overall notion and move that let's get long equities and indices. The Dow Jones hit, I think, it was just under 49,000, so like 48,977, which was up over 1.2%. The S&P rallied 0.6%, and the Nasdaq spot 7%. So saw a decent day in the overall indexes. The FTSE 100 again, we discussed about the benchmark of that 10,000 level. Just to recap on it, we did see that trade above the UK benchmark of the FTSE 100. So we saw 10,000 on that. Now, why was it boosted? So if you think about what happened over the weekend, what stocks, this is where you need to think about things from a long-term investing perspective as well, but we're just covering the overall market conditions at the moment, so we don't need to think about that from a day trading perspective. But what stocks would benefit from the weekend? So what stocks would benefit from the capture of Maduro and the intervention into Venezuela from the US? What companies? Have a think about it whilst I obviously talk, and I'll come back to it. Gold and precious metals, we jumped over what, 2.5, 2.5, 2.7% roughly on gold. That traded up at 4,400 an ounce, so just over 44, 43 an ounce. Yeah, 44, 43 an ounce. Silver surged over 5%. And I think what we're seeing is confidence within a hedge. So investors are buying stocks, but they're also keeping that protection in their drawer. So it's kind of like insurance. They're hedging out their risk by having some investments and portfolio elements in their safe haven assets, and they're also getting long stocks because they're trying to find that right balance within their portfolio. We discussed this, and oil prices, we said realistically, are going to be very volatile. They did initially move about $1 on the news, with WTI trading at around 58 and Brent trading at around 61. And we did see some big moves in oil. On my investment portfolio screener, a couple of oil companies came up, big names. We also saw big moves in companies like Chevron, Exxon, and I think that's purely because they will try to be one of the big oil players with the Venezuelan reserves. So there's a lot of hope for the future. And we discussed this yesterday with the goal of where we're going to see rotation out of the safe haven markets into riskier instruments. We were looking at crypto leading the way, and Bitcoin obviously being one of them. We saw a move in Bitcoin over 3%, and we saw trading over $94,000, which rebounded from pretty much a crap year end of 2025. Now, what we're seeing today. Now, I'm going to be looking at risk on momentum. Definitely want to see that continue into Tuesday's opening sessions throughout London and into the US. Gold, realistically, we want to see it holding those gains, pretty much remaining sticky around that $44, $60 per ounce. Bitcoin remaining steady around 93,700, 94,000. That'll be good. Obviously, it may consolidate following yesterday's gain, because what we're going to start seeing is institutional inflows rising. The Nikkei had a good night, so that potentially shows a bit of optimism. Now, where did that move come from? So tech and AI was primarily the bigger movers in the Nikkei. We saw it move over 1.3%. And FX markets. Now, I discussed yesterday that I potentially see a long in the DXY, which didn't really materialize. We saw that drift lower. Now, the reason it drifted lower, and I'll quickly pull up some of the data that came out yesterday. So we had the US ISM manufacturing data, and I touched upon it yesterday, and I said, listen, we want to see like 48.5, 49 or above. You know, we want to see positive momentum. We want to see improvements. It doesn't necessarily need to be above 50. If 50, of course, shows expansion within manufacturing, and it shows positivity and optimism for the economy within the manufacturing sector and specifically activity. But if it was already under at 48.2, as long as we're seeing incremental growth, like 48.5 and so on, it's moving in the right direction, is what I said yesterday. Now, yesterday, the data came out and it was worse. You know, it fell for a third consecutive month from 48.2 to 47.9. Now, that shows optimism is still not there. there's a lot of uncertainty in the manufacturing sector, and it was the lowest level since October 2024. Now, price pressures remain elevated, very summarized, but on the other hand, movements is so new orders came in at 47.7 versus 47.4, and there's a backlog of orders of 45.8 versus 44, and new export orders of 46.8 versus 46.2. So it shows that customer inventories and the index remain pretty positive from a perspective for December. But because obviously there's a contraction in US ISM manufacturing, I think we're looking at a longer term recovery. So the market's moved on the optimism of the US infiltration of Venezuela and the look from rotation out of safe haven into riskier assets, or at least some form of rebalancing of a portfolio, right? But it was good. It was a good day yesterday. Obviously, I'd like to see that optimism continue, but if you kind of just look at where the US 500 is right now, we're trading off of that 6,900 level back down into 6,800s. So let me quickly recap yesterday's trade for you. Like I said, I didn't take a trade in the London European session. I only took a trade pretty much pre-ES. Give me 1 second. Pre-US in the ES. Now, following the tone, I was looking for longs because overall we're looking at bullish, optimistic market sentiment. We're looking for higher prices in the US, targeting that $7,000 level, which we didn't get. We was what, 20? We was 80 points off pretty much, which is a shame because that would have been a great level. But that level will come this year. When I'm not Robert Kiyosaki, I don't put prices on things. I'm not Michael Berry. I don't tend to get short. So in terms of the way the markets were, obviously looking at overall volumes, looking at where the ATRs were trading, we continue to see this kind of, I would say, bullish price containment. So we had higher highs, higher lows being printed. We tried to print higher highs. We then obviously created some form of range. So we had that range trading from Sunday into the European session. We then obviously broke above that structural high of 68.75. Then we really started to get that momentum in. So if we kind of just look at the way price, after we took out this higher, we had obviously the higher low printed. We then had the higher high versus the structure. And we then created what I would class as like your liquidity range. Now, that is purely where we get a lot of overextension in price movement. So we had an overextension in price. There wasn't that much liquidity because we were obviously coming into the early hours of the European session. And then we built up pretty much all of that liquidity coming into it. Let me just find something like this. I'll just use this. And we had all of this kind of upward revision in liquidity, which is still bullish. We're still seeing it, but there's no momentum. Now, that means realistically, there's no volume coming in the markets. No one's really interested in buying up at those levels at that time. So we're going to be looking for something that's of fairer balance. We're going to be looking for price to pretty much rebalance and come back into its own. Now, when you trade and you're looking at kind of your peaks and your troughs, in this particular scenario, what we can see is there was no real generated liquidity. So we wanted to come back down towards some form of support area, be it a demand level or an overall range of price. And this was at the extreme of the move. Now, however you want to quantify it, whether you're using liquidity concepts, just so that I can mark that out so that you can visually see it better than I can. You've got some form of liquidity there, which did take out the high. Obviously, it wasn't really a weak low because it did take out that structural high, and it, of course, continue to trade it up. But we do have the extreme of demand. Now, if we're looking at momentum and buying as price continues to break out, you'd pretty much be looking at kind of something like this. And that's pretty much what it's done, right? So after that, we got that huge move to the upside. Now, coming obviously into the early US session, this is where, for me, I actually did get long. So obviously I was looking at where price was going to continue to move from here. We failed to take out this low. And if we had taken out this low, then I would have been looking at, okay, we're bearish, unconfirmed. So I would have waited for price to come back in to visit us an area of resistance or a supply level or a pivotal area that we could potentially look to confirm that we're bearish. Then once we've confirmed we're bearish, I'd obviously be looking for continuations to the downside. Now, we didn't get that. We respected the moving average. We respected support. We respected demand. And then obviously we had this high as our original target, which is here. And for those that were with me yesterday, my hands are much warmer today because I turned my heating on a lot earlier. So my hands are actually they're working with me today, but being on the screens for nearly 20 years, I've got problems with my hands just because I'm always on the mouse and always at the screens. Once markets gave us, that rejection of that support level or that demand level, however you want to quantify it, we had that initial rejection of the VWAP or the anchored VWAP, and we traded above the anchored VWAP and we closed above. And once we closed above and retested, this is actually where I got long. So I had this long here and I actually protected this low. I protected the area of support. And then from there, we just pretty much rode this move and run a trailer until pretty much close of session. So good trade, not too much risk on the table. Nice R trade. Took some dollars off. I'm not going to talk about notional amounts because we're not here to swing the proverbial, what. This is all about understanding the markets, analyzing the markets, trading the markets as best we can. Whether I made $1 or whether I made $10,000 on that particular trade, it's irrelevant to you. I'm not here to necessarily entertain I'm just here to obviously provide education as well as entertainment. But realistically, I am 90% education, 10% entertainment, 9% education, 10% entertainment. But really nice trade. Now, I did actually contemplate fading this move, and I'm not a big believer or the best at shorting markets. I used to be when I was working for a wealth management firm out in Australia. We were seeking alpha and seeking opportunities on both sides of the market, so we were running long short. However, I started to stop shorting when I took a particular short on a company and it tanked. And whilst I got it right, it didn't feel right. So from that day on, I struggled to get short. But hey, some people don't care, some people do. So I much prefer to stay long. And when it comes to indices, for me, there is the opportunity to get short, and I see it all of the time, but I'd much prefer taking longs. I will be short. I still try shorts. I still do short, but I find it much harder than being long. It's very hard to be bearish. One of the strongest economies in the world. It's very hard to be bearish. The market, you've basically got a sell side negative outlook on the world. And I don't think anyone should really have that. Everyone should have a positive outlook on the world. Everyone should be bullish. But after we started getting those rejections up at the highs, obviously we can see the volume was fading out. And for me, I just started to see, okay, well, let's see what breaks down. I didn't take the trade. I was thinking about it. Like I said, I didn't take it. But once we started to break down and we started to see supply take control, for me, there was obvious opportunities to get short. So this is for me where realistically we started to confirm bearish. And we could have shorted in and around here to take that level down. Now, is there an R on the table? Yeah, there is. Would you have been happy with it? Maybe, covering that structural high. What's in there is 1.25 R, 1.5 R. You're not getting 2. There's no way there's 2 R there. You're not getting taken on that. And then you're transitioning into rollover. So with a couple of the futures firms, you need to be closing out by end of day. And Now, end of day, you're trading into what, around here. So by that time, you're potentially just closing your position. So you had a good run. You know, you're still up on the day. You've got that long from the morning in the opening session, and you had that short trying to fade that move back down. But when the market's bullish, all you're doing is you're fading the strength. Now, that doesn't necessarily mean the market's going short, nor does it mean that the market's actually moving bearish. It's just intraday momentum from buy-side sellers, sell-side pressure, and people taking profits on the day. You know, first day of the full trading year, we've had a really good run. Traders have had a good day. There's a lot of uncertainty in the markets. Take your profits, leave some crumbs on the table for the master, and then close the books for the day. However, there is a short available. There's about 1.5 hour. If you're running at what, 60% strike rate, 1-to-1, there's another trade there. It's not too bad. You know, you've got that 1-to-1 on the way up. You may have had a couple of scale-ins there as well, which you do, to be fair. You do have a scale-in on this leg. It's just, of course, do you take it? And the reason I say do you take it is, see this grey horizontal line that I have marked out just here? That is pretty much the extreme of the volume range. Obviously, the point of control, we're trading above, we're at the extreme of the volume range, and the volume is obviously still present, but it's not as strong. It means that buyers are now really starting to kind of wind down their positions. So whether you want to take it or not, up to you. But there is definitely a trade inside this, and you would have made another 1R if you're trading at 1-to-1. You potentially would have made another 2R as well. If we cover that structural low, you're not getting 2R. You're barely making 1.5R, but there is another 1-to-1 trade there. But again, you need your strike rate to be quite high to be able to hit a 1-to-1. As long as it's 51% and above, then you're going to be break even to plus PE, plus BE positive. All right, so let's look at current market conditions. Like I said, I do struggle to get short, but let's quickly break it down. Let's move this to here quickly. I'll rechange these. And you know what? Why did I do that? I don't know. No, I'll just do this. Sorry. Apologies. Overall, you know, what we're seeing. So we've got higher highs being made in the markets. We've got higher lows. Obviously, internally, we can see that we're taking out internal legs of the structure. We failed to take out this high so far this year, right? So far. It doesn't mean that we're not going to take it out. But we've definitely, I think this low will go. Just looking at the way this price action is, unless this EMA actually gets supported and respected, I do think that low is going. Gold too. I'll cover gold, Albert. No worries. It moved better than US index. Well, it does. You know, gold is a lot more volatile. And I actually interviewed a trader yesterday who's had 8 payouts from Seacrest Markets, and he's multi-funded across multiple prop firms, and all he trades is gold for a 1-to-1, 1-to-2 strike across the Asian into the European session. And gold is a good mover. Gold is probably the most traded instrument in the prop industry, probably in the CFD brokerage industry as well. Obviously, I don't have all of the broker data or all of the brokerage datas, but it's definitely one of the biggest instruments traded across every prop firm. I know many prop firms in Q4 of 2025 that got hit very hard with gold, including your biggest. Won't name names. Now, in terms of the breakdown, the expectations realistically, if you know, there is that opportunity that this low goes and we come down to trade into here. Are we transitioning? Are we slowing down? Or are we moving into a range bound market? You know, it's too early to tell at this moment in time. We've obviously created that higher high. We haven't taken out this low, so we've got that move here, which is then obviously being rebounded. But we're starting to see at this moment the opportunity that this is going to be a potential lower high. Now, of course, what we need is that low to go before that gets confirmed, and then we need to see some form of supply side respect. So price comes back into resistance. We then see potentially that confirmation that we're looking to get short. Now, in January of 2024, we did see January perform rubbish. January was absolutely rubbish in the markets, but from February onwards, it was great. And then, of course, later in the year, we had that peak to trough move where everyone absolutely crapped their pants. Excuse for the language. So, but then obviously markets finished up 18%, nearly 19% on the year. So, absolutely incredible opportunity to get long. And that's a big thing for me. If you're shorting, you've got very limited downside when you're trading derivatives, and that obviously is CFDs or futures. And of course, if you're in the UK, spread betting as well. However, being long, you've got infinite upside, and with the way the S&P runs, it's obviously weighted, so it's very difficult to be short something that if there's a weak performer, if you're just long an ETF or an index fund, it's very hard not to be long, because if there's a weak company, it just gets switched out, and then it gets reweighted. So very difficult to be short. But at the moment, longer term, I'm still bullish, but we're bullish unconfirmed because we failed to take out that high now. And because we failed to take out that high, it suggests we're moving into a range, or we're making lower highs. And if we start making lower highs and we then break this to make a lower low, we've obviously potentially got some form of equidistant channel, some form of bearish descending channel, which also could be seen as a bullish flag. But we have to see that breakout in order for us to quantify it as a bullish flag, right? Otherwise, it's just an equidistant channel with fake breakouts on either side. So we only use technical analysis as a confirmation, as a complement, and as a proponent of what we do. Everything is primarily driven from top-down analysis and utilizing a quantmentum approach. So looking at technicals, fundamentals, combining the two, especially on a longer-term perspective. But if we move down, obviously, from a day trading intraday perspective, there's a lot of opportunity. I think, once I've covered this, I'll cover gold, and then I'll cover sterling yen, because I want to cover sterling yen because I was looking at ideas that we could trade short if the market broke down. It didn't break down, it went long. Why? Risk. Everyone wanted to be long sterling because it's a risk asset rather than being long the yen, which is a safe haven. So people got long sterling, they realistically got long euro, they got long stocks, and as the coverage, as the hedge, they got long gold as well. Now, as we break down into the 4 hour, we can actually see from the volume nodes perspective, we can see some form of structure being taken out. Let me just grab the paint tool. So we've had the logo there, we've had a logo here. Not the nicest. There's a bear flag. Not really a big fan of bear flags, but it's a range bound continuation. We then come back in, we retest supply, we then break down, we come back in, retest supply. So we had a intraday bearish trend as we drifted into the close of the US session, and that's realistically either profit taking, some form of intraday short to capitalize on the weakness, but we did fail to take out like the last structural swing low. So the last structural swing low was there, which obviously caused this high to go. That's failed to be taken at the moment. So we could be moving into a range bound market, right? As this low went, we've then pushed up. We are bullish, unconfirmed on the 4 hour. Nothing there yet. So this is rangy for me. Very rangy. Coming down into let's go 60 minutes first and the 1 hour, just to see what kind of color and flavor we can get inside the charts. I'm not sure why the ATR levels are not showing up. Maybe they're only on my ES. I'll check in a moment. But same stuff. It's just painting that picture, right? We had that logo. We then come back in. We then ranged. We then failed to take the high. We had that range trading there. We then took this low. We traded back into supply. We took that low. We come back in. We traded. We come back in. We traded. And then we failed. So we come back in and we failed. Now, I think if you look at it, we had what? 1, 2, 3, 4 moves. Now, after this one, momentum really died off. Obviously, we started to see the fail to follow through down here. And then price obviously just took control. So just looking. I guess it's just the average price. If you look at where price was trading, it's pretty much spat in the middle of it all. So it's more than likely just coming back into an area of strength. They're happy with the kind of trade below equilibrium, and then they've got long because it's down in the lower echelons of the move, which good from a value perspective. On an ATR perspective, it's probably underextended, which now means we can get long again. But no real flavor on the 60 minutes at all, because look what we've done here. This is core price action, right? So had this move, we've taken out all of this, we've come back down, we've not really done anything, we've traded into the PA, but then what we've done is we've failed to take out this high, which now that we failed to take out this high, this low's weak. So we knew that low was going on a probabilistic basis. So that low's gone. Now we just need to see where market wants to go. So for me, it's just a patient game. We've just got to wait to see where markets are. And bearing in mind, the US market's not open. So we're not too worried at this moment in time what's going on. And, you know, same really with the M15. It doesn't really change the picture. You know, we've got this area of demand that kind of came in, price came in to the demand. We traded away from the demand, but we didn't have enough momentum or clearly enough bids in the market to take out that higher. So all we've done, respected demand, traded back into supply, which obviously demand has been used to fuel that move back up, and then we've come down. So M15 at this moment in time, unless markets change throughout the next 4 or 5 hours, there is that opportunity that price could come back in to supply. We then trade lower and go from there. Whilst price was in here, there's no short for me. You know, okay, if we look at it purely on the proviso of, okay, we failed to take out this higher, then there is that opportunity that we could look to get short from somewhere in here. Give me 1 second. Let me just clean this up because I just added these onto the chart in the last few minutes with you. Let's go down to the M5. So just to put the WAP. So after we've rejected that kind of the area of resistance, area of supply, yeah, okay, we're trading inside a range because we failed to take out the high, we failed to take out the low. This low is now weak because we failed to take out that high. Yeah, okay, maybe there is the opportunity to get short from somewhere in here, but the risk reward isn't there, especially if we're trading in a range. If you think that low is going to fail, then okay, maybe you're targeting, again, above 60%, above 55%, 1 to 1. If you're targeting your 1 to 2, then you've got to be trading down into these extremes and you've got to hold this position. It's not really the right time because the markets are closed on the US side. So I always look at it, okay, well, let's not trade the US session. Let's just recap on an analysis over the European session. Look at how we traded throughout New York and into the close. And then from there, we wait until the US markets open and we can develop. I think if we go into this, you know, we're trading back in. So from yesterday's open, we're very much overextended into ATR 75. So we were trading at 75% of the average through range. Now that potentially means that price does want to rebalance, come back in. So we could see moves back into ATR 25, maybe back into like the equilibrium of the open. And then from there, we might find that rebalance of strength. So let's wait and see. Gold, always believe in your soul. All right, gold. No, I don't trade gold much, just so we're all aware. Let's go out the week. So one of the best traders I've ever met. Look at that. That was the last bit of analysis I'd done on gold on the 24th of October. So I covered it yesterday. You know, I bought a lot of gold for a client back in 2017. He's laughing, absolutely laughing. And he bought it in bullion as well, so physical form, not on a derivative. so he doesn't have any overnight swaps. So overall, listen, we know where gold's trading, but yeah, one of the stories I was going to tell is I used to have the privilege of working with someone who I would say is probably known as one of the best metal traders in the UK, in London, definitely. I wouldn't necessarily say in the US, but I know he was heavily involved in the US as well, and obviously constantly flew back from London to the US and Wall Street, etc., etc. But something really interesting is his main focus was the weekly time frame, and he was one of the best decorated, certified metals traders, and I'm pretty sure he was one of the only people that held all of the certifications you can hold across LME, etc. So I do find it such an intriguing instrument to trade. Sorry, I just got a message on my watch. But yeah, look, we're trading at higher highs at the moment. So obviously we've taken out this. We know there's that rotation out of safe havens into risk. But yesterday we kind of saw that balancing of both. So after that high got taken out on the weekly, we've had that pullback. Is it a deep enough pullback? Subjective, of course. Overall, we're looking at what is going on in the economy geopolitically. At the moment, it's very uncertain. This does look like potentially that we're coming in just to trade into some form of supply, but we're not looking to jump in front of a trade. We will be looking to trade with momentum until it gives us the confidence to actually get short. So for example, at the moment, we still want to be long. This is where we want to be at the moment. If, for example, we start to get the rollover and we actually get respect from this supply, bearish unconfirmed, we're not looking to get short until we get that confirmation. For me, I don't like to jump in front of trends. I like to trade with momentum. I like to trade with order flow. And from there, I'll look to get short. But I wouldn't be looking to jump in front of a moving train until we get that confirmation. As we drift down into the 4 hour, price starts to really kind of give us that expansive vision of what's going on. So you had this area of support. Initially it respected, then it failed. This one wasn't really support at all. It got blown through, weak. And we came into the extreme of the move, which was here. We've wicked it. We've then moved up. We've then kind of come into resistance, which we've had price flip. So we've obviously respected supply, come back in. We've then traded into demand, which obviously is the move here. And then we've traded higher. Now, so at the moment, we are trading in a range. We literally got, this isn't the range tool, but we're trading inside this price range at the moment. Now, it will be quite interesting to see where price trades from here, because of course we've got the containment of price from supply side extreme, which, bearing in mind we're bullish higher time frame, this to me is a weak area of resistance, but it could hold. It doesn't mean it couldn't hold. Trading up around 4,500s, 45.5, realistically, with there is that opportunity that this gets respected, because we're going to be trading inside the containment of the range. And if you are simply looking to capture that move, you're going to be trading from the resistance into the support, and then vice versa. And you're just going to be kind of trying to trade the extremes of the move until we get that breakout. Until we get that break above, we look for continuations of long, or obviously the continuation to the downside after the breakout. Alternatively, like I said, just trade from the extremes of the range. Is anyone in any gold positions at the moment? Yeah, I can definitely share a view on Bitcoin. S&P, just a quick recap. One of the ones I first covered. The target yesterday was 7,000 on ES. I know that we pretty much rallied into decent mid-levels of 6,900s. So I was long. But expecting, again, similar to what I discussed earlier, obviously it's on the recording, but pretty much expecting some form of continuation to the downside if we continue the way we're trading, because there's no real major moves to be had. But I'm personally thinking upside. I don't like getting short. I'm in longs, SL. Okay. So are you long lower time frame? So something on maybe the 5 minute, the 15 minute. So price at the moment is being contained around the point of control. So the POC, as you can see, we're failing to get any momentum. So, you know, what I can see here is we're putting in higher lows, but we're failing to break. So for me, this is now weak. So I'd be looking for something like this. But, you know, I'm not in this, so I'm unbiased, and I'm not trying to deter your trading, because we have to change our minds with the way price action moves, right? But look, we've taken out this high. Nice move. We respected, but we don't have that momentum, that failure to move. This now could just be very corrective. We could just be corrective bullish, trading into like the pennant of the wedge, in which obviously the closer we get, the less tighter this becomes, the more springy it becomes, and we could either get that continuation to the upside, or we get that breakout to the downside. So we could just be continuing to move in a bullish range. But at the moment, you know, we're trading pretty much like this. So I'd need to see a break. But obviously from the extreme of the control, the point of control, I think we could be looking to take some profits, if I'm honest here. Just on the 15 minute. So look, we've got this. We failed. This is now. This is respected. This is then swept. So we've got a fake breakout here. This is potentially now weak. So either we're going to start moving in a range, or we're going to take this here. We're then going to move back in. We get confirmation that we're short, or confirmation that the market's trying to go bearish. We can then obviously look for the breakdown and then look for shorts. But keep holding it. Keep holding it until your edge says you're wrong, because I might be wrong. That's the point of trading. I might be right. I might be wrong. So Bitcoin. Okay, let's look at Bitcoin. My hands are starting to get cold again. So brief cover on Bitcoin earlier. You know, trading at around, we were steady at about 93,700 earlier. We started to break down. Consolidations and maybe profit taking from yesterday was the overall consensus and view, because we did rally 3% yesterday, which again kind of goes with the theme from the geopolitical instability. I was expecting a rotation out of safe havens into risk. So we did see the indexes rally, we did see stocks rally, we did see Bitcoin rally, but we also saw gold rally a bit. You know, I think it was like 0.4%, but Bitcoin rallied 3%. So we come out to the daily on Bitcoin. Obviously, we had a weak year, right? We had a weak end to the year. We started to create higher lows in Bitcoin and higher highs. So there's an expectation now for price to maybe trade up and above 94,850, so 95,000s, maybe targeting 96, 98. At the moment, it doesn't look like the nicest of technical levels, does it, if I'm honest? It looks like potentially that we're going to be drifting in this range and trading. Now, this could all change. You know, we could get this, we could then see a respective demand, and then we can see that trade back up into 125,000 for 2026. Alternatively, we could just kind of continue doing this, break down, and then look to trade short from 96,000. But I mean, I don't see that happening. If we look at where the markets have been coming from, we got this extreme of the move down here, which was that 76 to 85,000 handle. We took out that previous high. We then come back in and we traded into the range. We then took this. We then traded into this. We then created that new high. And then from there, we started to break down. So a lot of profit taken up at 125,000. And it's because you start getting these insane calls on retail. Retail at 125,000. Oh, it's going to 140. Like, people just get so, like, there's a lot of behavioral elements of finance, right? But so people get the money fallacy. They start seeing 125,000, and look, I'm long Bitcoin, so I want it to be 140,000, 150,000, 200,000. There is no reason to be bearish. We all want it. But coming into the main reason I mentioned the extreme, this is the extreme that caused that major move and the major breakout to the upside above 108. So what I'd like to see from here is break to the upside, come back in, trade in, get confirmation that we're bullish, switch, and then trade higher. And then we'll get that continuation to the upside to target the next high. So this is being the extreme of the move. We're now looking for that next move. So we've gone up, down. Of course, there's your, intra-market trades and intraday trades inside this, your intra-legs. There always will be with the market. But now we're looking for that next move up. And that's the overall goal. And I think, from a perspective of the way Bitcoin was trading, there was an opportunity to just scale in from a DCA perspective and get long. That's my overall consensus. I'll be looking for a base on intraday to trade back up into 128,000, and the DCA and scale-ins from kind of 95s, 93s, 88s, etc. Hi, Nick. Welcome to the stream. Help me with a funded account. Listen, Aliyu, we're looking at massive discounts. We're going to be running giveaways on the streams, so keep tuning in. They're available. I use Bollinger and MACD primarily. Nice. Price action only, no indicators, candlesticks. Wonder if he uses candlesticks or Heikin-Ashi, just to smooth it out. Hello, everyone. Welcome. Thanks for tuning in. Does anyone have any questions or anything that they need me to break down? I know I've covered the ES, I've covered gold, I've covered Bitcoin. I know I wanted to cover sterling yen because it was one of those trades yesterday that we were looking at overall rotation into bull markets, but it didn't mature. So if I break down quickly in the M15, I'll show you what we were talking about. So there was the theory that if we continue to break down, then obviously we could see maybe kind of a push down into 209s, 208s, but that didn't materialize. We actually continued to trade higher, and it was an exceptional move to the upside. We had that fake move to the downside. So if we look, we had moves continuing. We took out the low. We then traded back up. From here, it was just absolute bull fest. And that was pretty much the transition from European session into the US Open. So risk was on, and we were just trading higher. So I think there was a couple of people looking at getting long, and this was that kind of ebb flow mark. We didn't really push down, but we had lower highs being printed, higher lows being printed. We then obviously we failed to take out this low, which was the low that we were looking at below 210s, 50s pretty much to get short, which we didn't trade above. So we didn't take out 2140s. We then took out 211 spot 50s. We retested the level, and then from there, this is where realistically you could have obviously continued to add to your longs if you wanted to get long. After we traded outside of that, we then looked to get long over the extension. We pretty much look for a long. Structurally, it would have been very difficult to place your stop, so you just have to look for an anchor point that you want to try to put price where you think it's safe. Do you think it's safe below this low? If this is a true move with momentum, then maybe you could have had it there. You've got your 1-to-1, your 1-to-2s in here, but no more than that. So yeah, really nice move in risk yesterday overall. Already have, Ryan, shared the view probably for the first 33 minutes of this stream. Any other questions at all? No more questions. I mean, we're coming into the turn of the hour as well. So if there are no more questions, I shall see you tomorrow at same time tomorrow, same place. Hopefully we can get some trades today. Let's see how the markets develop. Obviously, like I said, I want to see the opportunity to get long in the S&P. Just need to see where markets. I think realistically, market wants to come back down to here. Like I said, if we can come back down to here, then base, then we may have the opportunity to actually get long through the US session back into those highs, maybe targeting 69.30s for the day. Because at the moment we're pretty much bearish on the intra move. You know, we've had that. We're now bearish unconfirmed. So I want to see this level trade into, but we're closer to 68.70s, 68.75. So I'm happy to wait, see if we can base, then I'll get long. But overall, that's pretty much me done. Can you share stats on Seacrest Market? I can definitely put them together for you. Let me know what kind of stats you're looking for. See, anything that, you know, breaches GDPR, we can't do. But happy to help, happy to do what I need to do. But let me know what you're looking for, Luffy, and I'll see what we can put together for you. But everyone, thanks for joining today. Thank you so much. Look forward to catching you same time tomorrow as we start, you know, rolling out better discounts, more giveaways, more interaction, bringing on guests to share their ideas, share their trades. Maybe we'll bring on some of our funded traders. So we're doing a lot of funded trader interviews as well. Now we've kicked those back off. We've restarted them. And maybe we can get them on as guests to maybe go over their trading strategies, their edge as well, which would be really cool, really inviting and exciting to see. But listen, over and out from me. Have a wicked trading session. Look forward to seeing you tomorrow, same time.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets lighting the dark.
Seacrest Markets leading the way, making the move every single day. Charts in the vision, mindsets aligned. Traders power, no fear behind.